And welcome back to the Short Vol Show Live. I have special guest Ilya Kipnis today, who is a trader, a teacher of all things computer code. Is that correct? Uh,
Some things. I actually have a course on trading on dating. Using uh,
and also a quant trader, which is something that's pretty foreign to me. A volatility trader, and overall, and also gamer, right? Gamer.
yeah,
And we this is our second interview. We did one, what was it, 2, 3 years ago, maybe.
yeah. Right after Volpocalypse. I remember that's exactly when it was. Or is it a little before Volpocalypse? I think it was a little bit before then. But basically, it was right before February 5th, 2018, and for me, I thought, hey, my system's doing great. And then, 2018 happened, and the past few years were honestly the most challenging I have ever seen in my backtest. Uh, and thankfully, the reason for that big challenge is going away, but not before making a big mess of things one last time.
Now you survived your strategy survived that apocalypse pretty well,
Yeah,
right? As I
yeah,
remember.
yeah. That one, you could there was some ample warning, ahead of time. Hey, so for the those seeing me the first time, my strategies foundation has been published, on my blog, quantstrattrader.com in late 2014, and I'll just explain it to the viewers again. Everyone knows what the VIX is, but there are other related quantities of the VIX. In that the VIX is a 1 month implied forward-looking volatility measure. There's also a 3 month and a 6 month. So the foundational signal of my strategy is that there's a ratio between the VIX 3M and the VIX 6M. So think of it as a sort of cash term structure measurement. And when that number is below 1, that is, it's in contango, and below its 60-day moving average, you want to go short vol. When it's above 1 and above its moving that same 60-day moving average, you want to go long. Uh, so beyond that, the edges to my strategy are: do you, when you go short vol, do you go SDXY, which used to be XIV, or do you go ZIV, which has now since you know been closed down, but I haven't had a signal for that yet. So now I suppose it'd be short VXZ, which has its own issues, but I haven't run into them yet because no signal. And when you go long vol, do you go VXX or do you go VX? Or if you're feeling adventurous, do you go TVIX or whatever the prevailing instrument for more than 100% long vol is? So that's the foundation. I have, some proprietary bells and whistles under the hood that say, hey, do you really want to confirm this trade, or how do you get out of, the long vol trade sooner? Because in March I was up around 200%, and then I gave half of that back.
Hmm.
So now I'm like in a 30% drawdown. But it was house money. Still, is kind of painful. And I modified my system again to make sure that doesn't happen going forward. But again, the foundational idea is that in volatility trading, you want to be a trend follower. Trend following has upside of the fact that you're not going to get blown up. Uh, that that the signal will keep you from getting absolutely destroyed by things like apocalypse. There will still be some bad days, like June 11th, 2020 came out of nowhere. I lost 17% that day in SVIXY. I made it back up, in the next couple of months, but bad days will happen. But trend following does one very important thing in this business, which is it keeps you from blowing up. There are people that just say, oh, contango, so long as it's in contango, the short ball, hand over fist, no matter what happens, so long as, as that term structure is anything less than flat, short ball, nothing can happen. And, the day before a apocalypse, you know, VIX 3M over VIX 6M, the ratio was less than 1. So if you were short ball, if you were just saying less, it's not backwardation short ball, you got blown up. Trend following does one thing and one thing well, and it's worth a lot of the other prices that come along, which is it keeps you from blowing up. The cost to trend following is, of course, as Corey Hoffstein says, risk can't be destroyed, only transformed. In that, in choppy markets, you're going to look really silly, which is what happened to me in 2018, shortly after we interviewed. You know, I have a Patreon subscription, patreon.com/OneStratTrader. You can put in the video. Uh, right after we interviewed, I had some short vol setups. That clown named Donald Trump, made a tweet and the market went completely against me and, lose a bunch of money or risk signals go off. So now I'm back to flat. Then then of course the market recovers because it was just a Trump tweet. I believe it's like, sell the news, or, buy the rumor, sell the news, or something like that. Whatever the saying is. And, you know, you get hit by the shock from a Trump tweet, you exit your position. The market recovers, you don't participate in the recovery, you go short vol again. Trump makes another tweet, you lose money again. And that happened to me like 4 times in a row in 2018. I was working with a crowdfunding quant fund, and they said, Ilya, you've lost too much money, you lost 25%. We got to cut you off. We're sorry. This wasn't in your back test. And yeah, look, you write your VIX 3M and VIX XM that only started being printed in 2008, right? So Vance Harwood actually calculated that ratio synthetically all the way back to 1990, but I actually backtested to back then, and it simply would not have been those numbers because it wasn't predictive at all. Uh, so I don't put too much trust in that. Not that I'm saying Vance Harwood is wrong, but because there wasn't actually any real market activity to move those ratios, the dynamics that we experienced, I don't think, we didn't really get what we experienced, when it was actually printing, when these instruments were trading. So 2018, really challenging year. You know,
Well,
my first losing year ever. And then
well,
2019 was also.
I mean, you bring up a good point, which is that we don't have all that much data for these
Yeah.
products and this trade. I mean, even though they do extrapolate back in time, even the extrapolating, it doesn't go back that far, and so we see some stuff that might be for the first time actually, which is different from the normal stock market where like they like to say everything's been seen before. So the problem was that you just started getting chopped up because of the tweets and stuff like that, and
Yeah.
it would give a false signal, and that ended up just chopping you.
Yep.
So
Yep.
do you think with uh, the Twitter being shut down for the president and a new administration that stuff will fare better at this point?
Yes.
Yes.
In a single word, yes. Absolutely. Like finally, it's time for the clown to bow out. But not before, one last stunt with his little army of goons storming the Capitol. Uh, but finally, we are getting, another president that's reasonable, an actual reasonable human being, and not a wannabe dictator. Uh, so if Washington can just stay out of the markets, that makes things, a lot simpler. Like, certainly, we had Obama and quantitative easing and making sure, that the economy doesn't crash, from 2008 all the way through 20. But a president that's boring, that focuses on his work rather than on his Twitter adorations or on his ratings or whatever other nonsense, this orange turd has been focusing on for years. That is so good because that allows market dynamics to take back over. Um,
Well, do you think that the Fed's role moving forward? A lot of people talk about how there's like a guaranteed put in this market, and that the Fed has kind of evolved into this thing that protects no matter what, just pumps and pumps and pumps into the market forever and ever. Do you think that will continue with this next administration? Will the Fed policy be kind of similar to the way it's been?
Hard to say. I forget where I've seen this. If someone can Google it, I'd be much obliged. But the best predictor for Fed action isn't some economic indicator, but that the S&P 500 is going into a drawdown. Because in 2008, Henry Paulson tried all sorts of manner of tricks, and they had this huge bust, and the S&P 500 drew down 55%, and nobody ever wanted that to happen again. So as we saw with the coronavirus, March, the market tanked 30%, and then oops, the Fed just started, just stimulating. And look, I believe in, I don't want to say I believe in, but like I think Stephanie Kelton, who proposed modern monetary theory, has a lot of great ideas that look, America prints its own reserve currency, and uh, that so long as people are willing to accept that $10 bill buys $10 worth of stuff, that you can print money and put in people's bank accounts so they don't lose the roof over their head. There's a pandemic going on. There are people out of jobs because they work in the restaurant business, in hospitality, in all sorts of face to face industries. And the Fed's job, honestly, should be keep people in their homes and to make sure they're not out in the streets. If that stimulates the market, so be it. It's our job as traders, not to question the Fed, not to fight the Fed. It's hard for me to say yes or no whether the Fed will continue to be a put, but I do wish that the Fed would actually listen more to people like Stephanie Kelton and only stimulate the market when they absolutely need to, not because Donald Trump calls for a tax cut for his wealthy buddies, uh, but when people actually need that, because part of the reason that trend following and momentum works, the idea that with trend following and momentum, they're very similar ideas. That you take the first look, that you don't know to exit a trade until it goes against. Similarly, you don't know to enter a trade until you miss out on some of the others. But if you look at the ETF ROMO, that's robust momentum. It's managed by Corey Hostein and Adam Butler of Resolve Asset Management. It had a pretty terrible year because it lost a bunch of money in March, and then it didn't really get back long the market, right? So, if the only drops are going to be very steep, then momentum and trend following are going to be less effective. Uh, that said, my volatility trading system did very, very well in March. At one point, it was up nearly 200%. And most of my gains for the year were thanks to March. In my interactive brokers, I shouldn't be talking which brokerage it is, but in one brokerage, I was up 98.5%, the other brokerage, 2.1%. If I knew at the beginning of March what I know now, it would have been up 200%. So kind of a disappointing year, because there was only 1 month that really made all the money. Short ball has been very challenging, actually, for different reasons. Because coming off of March, VIX 3M to VIX 6M ratio was sky high. So short vol didn't get back online for a while. And then, when their short vol jumps and the ratio jumps, you still have to wait quite a while for it to come back down below the average. And then you miss out on some of the gains. So, I also have an RIA investment with a short vol fund, and they haven't done too spectacular either. But my system works as I designed it to do. It's not, nothing is perfect, but I'm kind of happy with it at this point. So,
Yeah, it seems like it really hasn't been great for the short vol trade for a while now. Just even just look at the price like VXX or UVXY. It stayed in a similar range for a long time. It really hasn't made big percentages down moves
right.
in a while. And we've been above the the average for volatility for a while. I mean, we haven't broken through maybe we broke through 20 on like little outlier trade a couple weeks ago, but we haven't significantly broken through 20 on the VIX and gone below like the average in a while. But it seems like there's at least the potential to do that coming into the next year. I just wonder where we go from all-time highs in the market, just to more and more all-time highs, or what happens. Do you think about A lot of people are talking about now that it seems the Dems have, won those Georgia races, that we could see inflation coming into the market, and people are looking to buy like commodities, like I don't know, beans or different things that are attached to inflation. Do, do you think there's a danger of like the Dems coming in? I mean, I know it's very kind of like stereotypical to think Dems are going to come in and just spend, 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 and that's going to overheat the economy. Do you think that's a real risk right now?
No, absolutely not, because there are a lot of people out of work. The people who are parroting, "Oh my God, inflation." I mean, guess what? We should be, like I, I'm not a macroeconomist, but if I was in the position of macroeconomics, the way I approach trading is again trend following. Don't worry about inflation ahead of time before the inflation actually kicks in. Set your the Fed shouldn't be worrying about inflation. It should be worried about people staying in their home. Uh, you know, so what, the fact that there is going to be a fully democratic administration is something I am very, very in favor of. If it were up to me, there wouldn't be a Republican Party. There'd be, the blue dog conservative Dems and the progressive. Because I'm pro environment, I'm pro science, I'm pro a lot of these, futuristic things. I'm a millennial. That puts me, very clearly in that progressive, moderate progressive, sort of box. And the last thing on my mind that I'm worried about is inflation, because there are tons of people out of coronavirus still raging. People are still in quarantine, and when people can't work, I'm not sure where that inflation is coming from. I think if you put money, just print money into people's accounts, like that $2,000 stimulus, people are talking about, put it into people's accounts and do that every single month. Because you look at places like Canada, like Scandinavia, they're just, printing money, putting it into people's accounts, and there's no roaring inflation. Because inflation the reason inflation happens ultimately is that there's a lack of supply of something. That you give people a lot of money and they buy up all the apples. So the apple farmers say, "Hey, I'm running out of supply. I should raise my prices until I have a couple of apples, left over, and I'm able to sell almost all the rest of them for this new higher price." That's what inflation is. Uh, we can't really have inflation while people are worried about where if they're going to be able to put food on their. It's a complete non-worry to me. And even if you were afraid of inflation, the book I recommend to read is Adaptive Asset Allocation, uh, by Adam Butler and the rest of the Resolve Asset Management team. The site Allocate Smartly actually tracks their adaptive asset allocation strategy. I adapted that and created my KDA asset allocation strategy by combining it with another paper, which is one of the best tactical asset allocation strategies on Allocate Smartly among like 50 of them. High turnover, full disclosure. But in terms of being worried about inflation, I think there are much bigger worries. Just think about what's going on. We have high unemployment, we have the coronavirus raging, we have stark inequality. Inflation should be the last thing on people's mind. And in terms of the markets, like if you actually look at what the markets do, they do much better under democratic presidents ever since we got the internet. Like if you think about it, under Bill Clinton, the S&P 500 was just roaring. Under Bush, you had the dot-com bust. So from 2000 to 2003, it completely dipped. Had a nice little bull run from 2003 to 2007. Then it had the financial crisis, which just completely destroyed the lives of a lot of millennials, and a lot of other people going forward. And then under Obama, no drama Obama, the market was going up, 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 up. Just pure calm. A president that did his job. That was just pulse on what needed to be done, and the market just kept going up. Just kept going up. Because there were good policymakers at the helm. And under Trump, what happened? 2017 sure was a great year, and then 2018, I think that was a good year for the S&P, but for short vol traders, absolutely not. Um, 29, no, 2018 was a choppy market. 2019, that was the good year for the S&P 500. Not for short vol. And then 2020, well, hey, if the Fed is just uh, borrowing money to pump the S&P, well, sure you could go long the S&P, but if you just want to say, hey, everything's going to the moon, then the new 60/40 is Tesla Bitcoin that that made everyone look stupid.
Yeah,
But
isn't it amazing? It's amazing that Bitcoin is, what was it, 34,000 yesterday or something?
yeah,
I don't get it.
I don't get it either. Otherwise, I would have been trading it because
Right.
I thought it was a bubble in 2017 when it hit 20,000, and then hey, in the last month it was up 100%. And if I knew some predictive indicators for Bitcoin, I'd build a system on it just to diversify from vol trading.
It's
But
do you think that Biden is going to be influenced by the progressives in the party sufficiently? Because it seems like there's a lot of signs just from his cabinet picks. I know the person that he picked for, I think he picked a Native American lady for like one post, but a lot of the posts, it's like very centralist. He doesn't seem to be in favor of a lot of these things. I don't think he's in favor of marijuana. I don't think he's in favor of Green New Deal. I don't think he's in favor of Medicare for all. He seems like Republican light in a lot of ways, and I know progressives are kind of worried that they're not going to get a voice. I think AOC got 1 minute at the
convention.
convention. Is it?
I mean, look, Biden is, he's pretty old, right? He's the oldest president in history. He grew up in a different time. And most importantly, look, the Dems won both houses of Congress, the presidency. Trump completely ruined the Supreme Court. So unless Biden packs the courts, we still have problems there. And beyond that, my answer is I hope so. Because look, I'm a millennial, I'm a progressive. I want to see action on climate change. I want to see Medicare for all uh, because it works. The U.S. has the highest spending per capita on healthcare in the developed world by no small margin, and one of the lowest life expectancies among developed countries. Just Google that up: healthcare spending per capita versus life expectancy, and the United States is an outlier in all the worst ways. So, Medicare for all, I think it works. We've had empirical evidence that it does. Uh, so, as I said, I hope so. Green New Deal, AOC has her heart in the right place. I don't know her exact policies. I know she and Bernie Sanders want to introduce like a half a basis point tax on every single financial transaction, which I think is ridiculous. Uh, you know, so line by line, I'd have to look more into their policies, but their hearts are definitely in the right place. With Biden, I certainly hope he listens to more of the progressive individuals because those are the people that got him elected. Like every single Democratic president ever since the Southern strategy back in I think the 60s has lost the majority white vote. They've been elected by the minority, um, and really the Democrats owe those people a lot. You know,
Well,
it cannot be
demographics are
understood.
changing. Yeah, it's
For not only giving them power, but from saving the country from going down the dumpster fire that we just saw yesterday for the next God knows how long. We just saw what Trump did with 4 years, and I sincerely hope this is the reason the GOP goes the way of the Whigs. I've had enough of them, ever since the financial crisis, when they made my first job hunt a living hell. And, that's been haunting me ever since because you start behind the eight ball and, that caused problems because you had your first crummy job, then you get another crummy job, and then you get contracts. And, the ball keeps rolling that way, which is why, I'm trying to make enough money just to trade and say, to heck with this. And just to trade for a living, but I think you need several million unless you're willing to take some extraordinary risks. Uh,
Yeah, that's the
But
dream, right?
yeah, it's definitely the dream. Uh, but like just basic math. If you want to make 100,000, if you want to make $200,000 a year, and you make 10% on your investments every year annualized, you need $2 million. That's just basic arithmetic, right? Uh, but in terms of the political situation, I think the more Democrats, the better, because I still think there are more conservative Democratic people. I'd say I'm a pretty middle of the road progressive. Every single political test I've ever done has said, yeah, you're definitely progressive, but you're kind of middle of the road among progressives. Like I'm not all the way out there on the far lower left hand corner of the political compass. Like I am, kind of in the middle, closer to the center of that bottom left box, which is socially liberal, economically progressive as well. You know,
I'm surrounded. I live in a sea of Republicans. Like everyone around me is conservative, and so I'm always finding myself like on a 1 foot back, like trying to not convince people, but just kind of trying to get along with people. And I have to be very careful with being a YouTuber because I can't afford to have to alienate half the pool of potential people watching me. And so it's been helpful to me to be able to kind of it's helped me to to re-examine some of the issues and whatnot. I
uh,
certainly think Mitch McConnell takes some of the credit for the court situation with all the conservative justices. I think he spent a lot of his waking hours trying to figure out how to pack the courts with conservative justices, and he's been very effective at that. I wonder now if now
unfortunately,
that the Dems won Georgia, does that mean that he no longer is the leader? I guess because now it's
he's
fifty
now the
fifty, right?
minority leader. He's now the
Yeah,
minority leader because
yeah.
if it comes down to a tie vote in the Senate, I believe the tiebreaker is the vice president,
Kamala Harris,
Kamala
yeah.
Harris. Yeah, and so that's a good thing. In my opinion. But to your Republican friends, first of all, the argument I'd make is, look at those, lunatics parading the Confederate flag through the Capitol. Is that the tent you want to share? If they're Jewish, there were people wearing six WNE shirts, and Camp Auschwitz, the six WNE stands for,
I saw that. That's
6 million
crazy.
were not enough. Are those the people they want to share a tent? They want to share a tent with? Are those the people they want to share votes, because those people are monsters. Um, you know,
And there's some
like I
they appear to be somewhat disorganized. It wasn't like a well thought out, it was
no,
like
no, not well.
suburbanite. It was like slightly overweight suburbanites,
Right, right,
out of shape, coming into the city with no real plan.
right, right.
So it was
And
destined to fail. And of
sure.
course, that doesn't represent the majority of Republicans in this country. And a lot of Republicans are horrified by that, I'm sure.
I mean, look, 74 million vote for Trump, and my question is, are those the people you want to share voting? Because that's the reality. Um, from an economic standpoint, unless you're bleeding filthy rich, we're not talking, hey, I make 6 figures a year as a working stiff. We're talking, you know, absolutely, beyond comprehension rich, like making over $400,000 a year. At which point, what the hell are you worried about? You should be more worried about the planet becoming uninhabitable. Uh, you know, the markets, the economics are better for you under Democrats. That's if you should be voting with your wallet straight ticket blue. Why? Because until the GOP is gone, we're going to have issues getting better policies passed, so that that we look more like Canada, like Scandinavia, like New Zealand. Over there, they have longer life expectancies. People are happier. You know,
It, it's
this
very
isn't,
strange.
do you want to end
Mm.
up like Venezuela? That's a completely ridiculous argument. Vote with
Right.
your wallet, vote, vote the environment, vote the science. All
It's
roads lead to Rome, except for, completely unbridled greed of people thinking one day I'll become the guy that's making.
Yeah, and that's what it is. It's the dream. It's weird when I was watching the election coverage of like as they were counting state to state, and so many of the people that voted for Trump are in the ruralist areas, which is pretty much the poorest areas, and he doesn't that somehow the message gets to them that he's on their side. But I don't really, but it's
No,
not
not at
really
all.
true. It's strange. Like I don't think he would hang out with those people if given a choice
Absolutely not.
ever. Yeah.
Absolutely not. Like, how's the guy that goes around pretending he's a billionaire because let's face it, he's probably broke, beyond broke. How the hell does that guy who dodged the draft, who's never worked a real job in his life, know anything about farming, about manufacturing, about getting up on your feet, busting your ass 8 hours a day or even more, from dawn till dusk, actually putting in, physical labor. Does that guy look like, he regularly puts in physical labor? Absolutely not. He doesn't know. He can't relate to those people. I can't pretend to relate to them either. But as someone that's, taken it on the chin, plenty of times from the economy, from having the odds set against me, all I have to say is, to people is, look, I understand what it means to uh, feel like you're not being heard, because I've been under the Obama administration, I've lived under the Obama administration. It wasn't easy, but the Republicans are not their friends. Just the opposite, because their policies are past tax cuts to the richest and you know past lip service to everyone else.
Yeah,
Yeah.
we've got like 10 more days left with Trump, or 12 days, something
Well,
like that.
yeah.
I don't think they're going to go ahead and try to impeach him, or 25th Amendment, or whatever like that is. I think there's too little time. I think they just
There, it does seem like it's too little time,
yeah.
because by the time they get all the paperwork in a row and go through all the formalities, that January 20th is going to hit anyway. That said, State Department of New York, the guy's a complete grifter. He wants to be like Mussolini, and I certainly hope he ends up like Mussolini ultimately did. Uh, like no hyperbole about that. The guy has done so much damage; it's unreal. And at the least, I hope he gets jail. Though I think that's too nice of an end for him. Um, but like there's still time for the State Department of New York to go after private citizen Trump for all the grifting he's done, and I certainly hope they do. Uh,
Yeah, they probably won't though. They're probably going to be like, how Obama was with George Bush, even the war crimes and all that. He was still like, let's just move on. I think Biden's going to be like, let's just move on, and they won't do anything.
I'm not talking about the Attorney General going after
You're
President.
talking about the state of New York, right?
Yes, yes.
Yeah,
I'm talking, like Al Capone got busted for tax evasion, not for
right.
being a mob boss, but for tax evasion. Uh, for me, it's a matter of bitter blood. Because I was working with a crowdsourcing quant fund, and Trump gave me my first losing year ever. I want the absolute worst for him. And that horrible brood. That's most of his family. At least his direct. Mary Trump is awesome, but the rest of them, get him out of here. Um, beyond that, you know, like I don't think there is enough time to set an example of President Trump. I certainly hope I'm wrong on that. I do hope that officially he gets banned. Uh, but unofficially, even after he leaves office, I certainly hope the Department of New York comes after him for all his financial. Uh,
Did you see that on TV? They a couple days ago they had Eric Trump came on, and he like threatened all the Republicans who he said, if you don't stand up for my dad now, we're in a primary every single one of you. And as if he has all this power. And I think the president's power is going to wane quicker than expected. People are saying like he's going to be the kingmaker for the next 100 years or something. I think his power is
he's
going to wane
broke.
pretty quickly. Yeah.
I think he's broke after his creditors come after him, unless he actually was a Russian asset and Russia actually bails him out. But from what I understand, Putin is stepping down as prime minister of Russia for health related reasons.
Yeah, I heard
Uh,
he has Parkinson's.
oh my gosh.
Yeah, I don't believe that. I don't believe any of that Russia gate with Trump stuff. I think that that's all just made up by the news. I I think that he'd love to have Russia help them, and certainly Russia tried to get Trump elected because they thought it was in their best interest. But I don't see him as like a Russian asset. I don't think he's sophisticated enough for that personally.
Like,
But
I mean, after I read the first book of the Night Angel trilogy, I can understand why Russia would want that, because when your adversary is weakened, it's better for you. So, Putin is not a great guy. If you're an American, he's a very bad person. If you're American, and if you're most Russians as well. But in terms of what he's accomplished, for for rebuilding the country, got to give the devil his due. But the guy is obviously competent in terms of what he was doing. So now that he's stepping down, then at least hopefully the next administration doesn't actually bail Trump out. And if Trump has no bailout from Russia and he's actually on the hook for $500 million in debt, at least there will be some amount of justice served in the world. Uh, so like, I am hoping for justice and karma, but now that Trump's out the door and his administration's out the door, in 2 weeks, unless, he does something horrible in 2 weeks, uh, you know, things should be getting back to normal on the vol trade end. Um, there are questions I want to ask of you as an options trader, though, which is uh, June 11th, 2020, SVIXC tanked 17%, and that's a 50% leverage instrument in terms of short vol exposure. If that had been old XIV, that would have been minus 34% in one day. What I'm wondering, is there some sort of efficient way to have some sort of catastrophic protection on short vol positions? Like, let's say I want to say, I don't want to lose more than 5% in one day. These tail end events, they come maybe once a year. And I am willing to, and in terms of, short vol position, SVIXI positions, my analytics show I'm in, near term, near curve short vol about 40% of the time. So about 100 days, trading days a year, I have a, SVIXI, XIV, whatever the instrument will be, SVIX whenever it starts trading, if it starts trading, I have that kind of position on. If I say I want to have a deep out of money, put insurance on my position so I don't have, some sort of catastrophic 1 day loss of, 7.5%. Is it economical from a risk return perspective to say every single day I'm going to be in the market? I'm going to have a short vol position to buy one of those catastrophic insurance puts, or am I just going to lose more money rolling that insurance than I'll save by actually having it?
well, I would go ahead and just actually do the math on it. Decide what level of risk you're willing to feel comfortable with. You said 7% drawdown, which
In one day. In one day.
right, which is that's not that much risk, really. I mean, stuff could move a lot more than that, but to keep it within that range, I would look. It would be expensive to buy puts at that level. I think uh, it might be. It would definitely cost money, and to have it every day protected. I mean, it would be, to get a put against something going down 50%. You could get those for relatively cheap, but something to protect you at the 7% level, I think it would be prohibitively expensive.
Wow. Wow.
Yeah.
Because, like days like June, like SVIXY, it can go down 5%. That's not unheard of. Um, but uh, like SVIXY on 50% leverage had one day that went down 17%. If that had been 100% leverage, that would have been minus 34% in one day. And my question is, where does that trade-off come in that you want to buy this catastrophic insurance that's not going to cost you too much, but that's going to prevent this 1 day blow? Like, is it 10%? Is it 15? Is it, what is that number?
And I was
Because
working with a money manager we were working on this type of situation as well, where he was, he was shorting, let's say, UVXY. He was actually shorting TVIX, but that doesn't have
Oh
options.
god.
But um, but he was just looking at what sequence of events as far as indicators would trigger to buy that call protection. So you don't have it on all the time, but under certain market conditions, you put that protection on. And hopefully, if you time it right, you can have it on during the most risky moments. And that way, it's not on all the time, but hopefully, you're able to dodge bullets by putting it on at the appropriate moments, which is it's a
Right.
hard thing to judge what the appropriate moments are.
Right. Because look, hey, if we had a crystal ball and said, yeah, this day was going to be, minus 17% in short ball, then the correct answer is just close your position out the previous day.
Right, or
You know,
switch or reverse the other
right,
way, right.
right, exactly.
Well, what he was
You know,
talking about was, like, when we went into backwardation, anytime we go into backwardation, put the put the hedge on, that kind of thing, or
sure,
anytime these lines cross each other, put the hedge on. But to me, I almost feel like it's better to just position size smaller if you're afraid of that risk than to position size bigger with the hedge. It seems almost like it might be more efficient. You're always
right,
gonna have risk, you know?
sure. And I'm
Yeah.
wondering, is there some sort of, hey, I realize this is a very infrequent event, but I want to have this hedge against, an utterly catastrophic, type of day. Because look, like this past month, there have been multiple days that were down, more than 4%. Monday, I lost, 4.5%, and I made it back up today, right? Those days happen. They're shitty. Uh, you know, they're part of the
Mhm.
business, right? But a day that's like minus 17%. That's when you're trading and the equity curve it goes, hey, you're doing good, and then boom, you just see this vertical drop in your equity curve. That stuff that doesn't happen every day. That doesn't happen, even every year. I think that happens once in several years.
I hear you. I mean, I came from the market making floor trading side of the business where we were encouraged to take a lot of risk, and that stuff was happening all the time, and
Uh,
fortunately, these events were happening to the good side of things too at times, you
Sure,
know.
sure. March that, I had, multiple, good June 11th days. Like, oh, I'm up 20% today. Oh, I'm up another 20% today. Let's keep the panic coming.
But I mean, I would just say do the math on some puts. Just see, okay, well, this is what is you could either do a dollar figure or a percent figure, and this is what I'm comfortable with losing. Let's see how much it would cost for this protection and see if it's worth it to you. It's better to actually just do the actual math than to kind of talk about it in kind of hypothetical terms, and see if that's acceptable to you. I suspect that it's gonna be expensive, though.
I see. So we're talking more than, 10%,
Now,
more than 25 basis.
I don't know how to quantify it that way, I'm not sure.
I
I know that, obviously with VIX products, that side of the protection is the skew is, cheaper for that kind of it really depends. I guess if you were to buy call spreads versus just calls, then you might do better, but it would be a better deal, but it's still you wanna buy an actual call instead of just a call spread because that actually stops the bleeding completely, you know what I mean? A call
Oh, you
spread is
mean the
gonna lessen it
put spread? You mean?
or put well, yeah, I mean, on SV it depends if we're talking about SVY, SVY
SVX?
would be a put spread. On
Right.
UVXY would be a call spread, but
Okay, yeah. So if you're long ball, you buy the call, the call spread on the long ball.
right, right.
Yeah, like I'm not sure I have the sophistication to do that because I don't know how to backtest options. But I know I have, some of my money in an RIA, and how should I talk to them about, hey, how do you, propose you avoid another June 11th? Because we got lucky that was a 50% leveraged instrument instead of short VXX that would have said goodbye 34% of your portfolio in a day. Uh, this is something that kind of bugs me because, you know, is there a way to actually head that off? There's some way, what are my options in terms of avoiding? More pertinent to me because, hey, like as a trader, should I, should I try and put some sort of stop loss there? But all my like I've done a back test on stop losses for 1 day losses. That's saying, hey, if the open to the low is greater than say 5%, then I lock in that 5% loss and just don't touch it the rest of the day. I just get back in at the close. And all those tests said, look, you don't really improve your drawdown. In fact, you make your biggest drawdown bigger because you lock in losses instead of, something going, open, to the low is, -6%. You locked in 5%. And then, it closed only down 4%. So you left 1% on the table.
Yeah, I can see that.
Yeah, that's why stop losses aren't these magical things. People say, "Oh my God, don't stop losses, stop losses." No, stop losses, lock in losses.
And especially with these products we're talking about where the spreads can be very wide, they don't trade all the time. You have that risk, that overnight risk, or that when it's closed risk is a big risk. The markets have moved a lot overnight lately.
Sure, sure.
Mm.
That said, June 11th, it happened during trading hours. Like it opened down 4%, and that sucks. But some days it just opens 4%. You go, what the heck happened? And you see some bad news print, and the rest of the day it's like, okay, you opened down 4%, you lost another 1%. Then just wiggles around the rest of the day, and maybe at the close it goes one way or the other a little bit. It sucks, but that's part of the business. You know, um,
Yeah,
that's
totally.
not the stuff that blows you up. The stuff that takes people out of the business is days like June 11th, days like the one Kim Jong Un launched a missile. In my back test, I think it was like one of those days like -16%. And again, that doesn't blow up the account. That's not -100%, but it hurts, and it spooks people. And not just for myself, but for other volatility managers. What are the apps? Because ultimately, it's not just about hey size smaller because coming in on June 11th. Let me see if I have it open. Uh, like I want to see what the actual volatility looked like going in, into June 11th of 2020. So charts, performance summary, uh, XIV return, which I also have 2020.
Yeah, I
Um,
think yeah, I would just look and see actually how much it costs to buy that put and then to roll it. And
so
there's
going
possible there's possible of doing a collar where you sacrifice a little bit of your upside to pay for that put also.
right, right. So going into June 11th from April of 2020. I'm not sure how I can share my screen on this Zoom meeting. Um, Oh, share screen. Host. Oh, you disabled it.
Oh,
Uh,
do no, do I have to let you do it? Let me see if I can fix it. I didn't actually disable it. It just was that way. I don't know
so
how to do this. Hold on one second. Video settings, share screen, enable remote use of applications. Is that it?
maybe you can do it on yours, but if you just look at the return, the 1 day, like the equity curve of SDXY from April through August of 2020. If you can bring that up, uh, like you have a couple of days that are near the 5% loss mark, right? Um, but then you have that one really bad day in June. Like you have the equity curve of SDXY. It's going up, it's choppy, it's nothing pleasant. But again, volatility trading business, it's not exactly a pleasant business. That's why there's this risk premium. Otherwise, there wouldn't be any returns. It's not for the squeamish. But there's that one really, really bad day. Uh, and leading up to it, there wasn't anything that said, hey, there's a particularly awful day coming up.
Right.
And those are the kinds of days that get people bolting, for the door, for anyone, because I can't imagine, like, if this were if this were an actual 100% leveraged instrument instead of 50%, that's the kind of thing that any sane, rational, you know, fund of funds manager, crowd fund manager, investor says, you just lost 35% in a day. What the hell were you doing holding on to that position? You can't just say, well, my system said such and such. Uh, and I don't have an answer. Otherwise, I would have implemented it into my system already. Uh, but
Does
okay,
that show?
yes, yes. So, like, if you see that giant red rectangle, one in that third quadrant, right?
Yeah, like right there. Yeah.
Yeah, exactly. Like, boom. Um, Leading up to that, like, sure, things were hectic. Things were kind of unpleasant, but they were fairly normal. You know, all things considered, wouldn't you say so?
Right.
Like, that move is just a completely different story than what's been going on around, right? Um, and the
I
kind of
mean, I
things that
suppose,
blow up
yeah, that would be hard.
portfolio.
It would be hard to buy puts against. What you could do is you could buy weekly puts like on Thursday and Fridays so that you were hedged on Thursday and Fridays, but that's not really going to protect you for your customers. You know what I mean? But to have them the whole week, every week would be expensive, I think.
Right, right, right. Yeah. So, like, you're an options trader, you're a market maker, you have experience I don't. Like, I'm a systematic guy trading ETFs because those are the things I can back test. Because I think about how to back test options, and it's like, okay, well, on such and such a day, you had 10 different calls that you could buy,
Yeah,
and
I don't know how you do
10
it.
other
Yeah.
calls that you would sell. Like, I don't know how options traders actually make sure their stuff works. Because if I can't backtest it, I don't trade it. I have to see it in simulation before I put a penny of my own money onto it. Uh, some people might disagree. They say, hey, trade, $1,000 and see how it does. Uh, but yeah, like looking at that, it's like, how do you prevent those kinds of days from blowing you up? Like fall apocalypse, there was a warning. All of January 2018, short ball was just bleeding. I was in ZIV the whole month. So instead of losing 15% on XIV, I lost 50% on ZIV. And I said, hey, that's part of the business. Don't care. That's part of the risk management of the system. And then Volpocalypse came. I was out a week before, and I was just watching, and I said, "Is this actually happening?" And yes, it actually happened. But June 11th, look, I took it on the chin, and my question is there a way to not take it on the chin? Because that day did not really have a good, um, get out of the way. Things are going to hell. That did not have a good warning. Um, like, if I look at ratio, the 2020 06. Um, so on 2020 610, it was 0.95, and MA ratio 2020 06. Um, and the ratio, the 60 trading day moving average on June 10th was 1.04. Because that's when it was still coming off of coronavirus, because all the way through March it was, that was the big spike. So the moving average was still coming down off of the coronavirus. Uh, and even if I would use, I don't know, like maybe a 30-day moving average, I'd still find that the actual ratio was below the moving average, because it was actually coming down. Like June 1st, the VIX 3M to the VIX 6M was 0.95, then 0.94, 0.93, 0.92, 0.93, and then 0.95, 0.94, yeah, 0.9497, and 0.9468. So
Yeah, we were
the short
steadily
vol
sloping
trade,
downward off that, like you said, off the spike, the initial spike. Yeah.
right. So that was a good short vol setup. Like that day, it's like I don't think I was doing anything. There were warning signs, like blaring warning signs that this was a big blow up that was coming, but it hit anyway. And I'm
Yep.
thinking, hey, if I could work with some sell side financial institution to say, look, this is my strategy. I don't take unnecessary risks. I want to hedge catastrophic one day events. uh, how can we work together so that I can buy some portfolio insurance? That's the question that's on my mind right now because I think I have most of the risk kind of covered through trend following through the usual signal processes. But there's still some of those really bad days that get through the cracks,
Yeah, I get
and
it. Yeah, totally.
they can bit once, shy twice, as the saying goes. They can really um, cost you assets. They cost you returns. They cost you assets or subscribers depending on your model. I'm not a registered investment advisor, so I can't actually run my own fund. All I do is say, hey, this is what I'm trading. Pay me a little bit, so you just see what I'm trading. Do with it what you want. Uh, and you're a much more experienced discretionary trader than I am. You're experienced in options. Not saying, hey, if
We
there's
have
someone
different
out there with
skills.
answers, yeah, exactly. If there's someone out there, with experience different, from mine, this is my question, and if you have a good answer, I am all ears. Uh,
Leave it in the
because that
comments.
absolutely, absolutely. If you're an experienced trader, hey, I'd love to chat. I have a contract job right now, but there's someone that says, hey, you're a skilled trader. Um, let's talk. Uh, you know, I can actually bring uh, some like a pretty harsh estimate of my latest model, or I wonder if I can actually bring up my uh, actual Robinhood performance because like I can show you all of my performance, share my screen. Um,
Let me see if I
so
can fix this. Sorry, I'm not very good at this
yep,
Zoom stuff here.
yep.
Window size sharing, automatically share, advanced. I don't know if this is what you can let other people do. Screen alerts, enable.
Because
Seems like
showing
everything's
the equity,
on.
yeah, like because sharing the equity curve, for the latest model doesn't do anybody any good. I want to show what my actual performance was. Um, and like whenever somebody would email me, hey, what's your actual performance like? It's like, look, here's my latest model. Here's my actual trading record. Because look, if I can see a way I can improve my system, I do it and I put it into the latest model. But I'm going to own the fact that I gave back part of my March trade, and but the crowd fund that rationally, dumped me in 2018 because I was losing money to Trump tweets because I overfit, for a world in which no sane country would elect Donald Trump, especially not the US. You know, they dumped me in 2018, and then 2020 I would have made back everything I lost and some. They would have been up. They would have been very happy over the last few years. Ever since I started trading, my longest track record, my Robinhood is 133.66% ever since April 7th,
Here,
2017.
try it now. See if it works now.
Okay, let's share screen. Um, yeah, screen share. Um, and
Yeah,
yeah,
there you go.
like
It's working
that.
now.
Yeah, that is my Robinhood. Like, yeah, I know retail brokerage account, but that's where I started. So that's my longest. Um,
Nice.
my actual money. So 2017, I was still refining my system. That was the original system, and even later in the year, I decide, hey, there's such a thing as the ratio being low enough that the moving average doesn't matter anymore. And then 2018, like this, it's 2018 here. I lost some money in January, and then I was out right before Volpocalypse, and flat throughout Volpocalypse. And then, okay, hey, system is doing what's supposed to. Let's make some more money. And then the Trump tweets just start coming in, and boom, 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 boom,
Hmm.
boom, 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 boom. You know, that was that was a nightmare. Because like, hey, did I completely overfit my system? Did I just completely over optimize a back test? You know, is it not working how it's supposed to? And then I started making money again late 2018. That this was a long ball trade. Uh, got back short ball in 2019, and then this was a Trump tweet that was made during trading hours and
Hmm.
cost me 10% in one day. And then I said, hey, is there an actual improvement if I decide, um, does it make sense to execute short ball on on open versus the close? Like I get my output, you know, uh based on the CBOE's data from the previous day. So today is Thursday. So tomorrow I will run it, 7 a.m. in the morning, get an output. And I said, hey, does this make a difference if I execute always on close or sometimes during the open or a mix? As it turns out, yes, it does. There's some alpha to be gained by that, mostly because you avoid some craziness during hours. Like
Hmm.
if a trade really goes badly against you, uh, you might want to execute on open and save yourself the headache of another really bad trading session. But 2019 was kind of a scratch, so that's this part here. And then 2020 March, boom,
Boom.
made out like absolutely crazy. And then
Nice.
I lost this part, uh, you know, which was painful. Uh, But that's when I asked one of my subscribers, who's actually a fund manager in Europe, hey, did any of your other vol managers get out ahead of this? And he said, yeah, one of them did. And so he told me what they were doing. So then my latest model looks like, where is it? Go down. Uh, so uh, so so that is like my latest model. Um, and yeah, so um you know
Nice. Well,
so
nice little P and
eh,
L pop, huh?
yeah, like that's March 2020. And like if I look at this, um like I say, from 2008 onwards, because that's when VIX 3M to VIX 6M started, actually being a real quantity. Uh, so if I look at this, like let's just look at 2008 through 2010, and like there's a big pop in 2008, and in the call markets you just collect the risk. It collects the risk premium. But when things really hit the fan, like in 2008 and in 2020, uh, that's the long ball end of it.
Mhm.
And part of what I think sets my strategy apart from a bunch of other short ball um, trades is that I have that long ball end of my uh, of, of my strategy. One thing, yeah.
Right. There's a
So
potential to make money both ways. Yeah.
yeah, exactly. But again, the downside is charts performance summary of the stretch, 2018 to 2019, bring up screen again. Uh, you know, uh, so so basically, yeah, there's no free lunch. 2018 Trump sideways market, you're gonna get, that's trend following getting chopped up. like uh, you everything has a cost. Every trading strategy has ups and downs.
Right.
So, the upside is that if things are really calm or really crazy, I can make money there. Uh, but if they're choppy, then the strategy can lose money. And Donald Trump was the definition of choppiness. Um, so uh, that's
Well, it's almost over.
it is. Um, so that's me in a my vol strategy in a nutshell. I do some tactical asset allocation research as well. So and actually for those that are interested, uh, charts, performance summary, ADA 102. This isn't as impressive. From 2008 till now, it's just a very calm, um, low returning strategy. Uh, ADA 102. So it can get 10% annualized a year, but it's just calm. Um, my volatility strategy, I want more bang for the buck. And so now I'm going to start researching into hey, what if you just applied tactical asset allocation on these high flying tech? What can happen? I haven't looked into that, but yeah. So
Interesting. It's all a little bit gobbledygooky to me, but the
uh,
programming stuff.
see if DataCamp would actually allow me to teach another portfolio management course in R, I would. But that was I taught my course on QuantStrap back when Lori Derrick was there, and ever since then they had a huge issue with their CEO having a sexual harassment case, which is all sorts of no good. Um,
Yeah, that doesn't sound good.
so I it's just my course is taught on is posted on that platform. Uh, you know, I'm not sure what other platform I can use to actually teach R for finance. I think I still have quite a bit to teach. Uh, but that's my strat, my vol strat, my my tactical strategy, and that's the kind of trader I am. I have to see it in simulation. I have to backtest it 100 different ways, and make sure I'm not fooling myself by overfitting it. Uh, you know,
Well, listen, thanks for coming on. I'm gonna leave some of Ilya's links down in the description. And so you can check out his strategies, and there'll be links to his Patreon as well if you want to check it out. And I appreciate you coming on and catching up with
sure
me. We
thing.
have to do it more often
Absolutely.
than every 4 years or whatever, but
Yeah, how often would you like? Because it would be nice if I could, it would be nice to just check in and say, hey, these were the past few months for me in trading, and I can tell you what went well, what didn't, uh,
sure. Yeah,
because
we'll talk off the air, um, and stay in touch.
yeah, absolutely, absolutely,
Cool. Thanks so much for your time, and thanks everybody for watching today. And we will see you next time. And like you said, with the new administration in the next couple weeks.
yeah, absolutely.